As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Tonight we have a returning guest, John Rubino, manager of DollarCollapse.com and co-author with Gold Money's James Turk of The Money Bubble, is here back with us on Reluctant Preppers. Thank you for joining us again, John.
Hey, Donegan. Good to talk to you again.
We met in person at the Liberty Mastermind Symposium where you gave an address on honesty and dishonesty in consumer products and what it signified about the need for vigilance and awareness to be informed about what's really going on in the economy so you can make prudent life choices. If you could leverage that direction, if we could bring you back to that, but a recent article that you just wrote about the debt position in China and whether the Chinese economy, as one of the world's largest economies, is actually in trouble or whether it's actually showing signs of growth. And what does that have to do with honesty and dishonesty? And what does it have to do with what we can infer about the broader global economy and our own? If you could take us back to that topic, help us show us what's really going on in what appears to be being reported as reassuring signs of growth in the Chinese economy.
Yeah, well, to understand today, you have to go back a little ways, at least, to 1971, when the U.S. broke the final link between the dollar and the other world's major currencies and gold by closing the gold window. That's the term for what Richard Nixon did back then. And since then, we've had currencies that are fiat currencies. That is, they exist by government fiat or decree, and they're not backed by anything real. So governments since that time have been able to create as much new currency as they wanted to and put it out there into the economy, and in that way cover their overspending without actually telling us what they're doing, because inflation is a hidden tax. It makes your savings worth less by funneling value back into the government. And so that's the sort of the original sin of fiat currency, is that it allows governments to lie to us about how much they're taxing away from us, because inflation isn't well understood as a tax. And ever since then, governments have spent more and more each year and borrowed more and more each year. And in order to cover the cost of all the debt they've taken on, they've had to aggressively create new currency, and that's kind of accelerated the wealth transfer process. And more recently, when this debt really started to bite, like in 2008, 2009, when we had the last big financial crisis, governments have been borrowing more money and creating more money than ever before, and pretending that that was creating actual growth. So this recovery that we got over the last few years really happened because we borrowed absolutely insane amounts of money. The US, Europe, Japan, and China all borrowed, cumulatively more than any other group of countries have ever borrowed in such a short time. And yeah, so we got a few new jobs out of that, and we got some very modest growth in things like housing and business formation. But it came at a cost that is overwhelmingly out of proportion to what we got. And the governments don't report this. They don't tell us, oh yeah, the recovery happened because we borrowed all this money, and each new job cost us $500,000, and the value of all these currencies are going down dramatically, so your savings are becoming less and less valuable. They don't mention any of that. And so we're being conned into thinking that normal life is returning. Home prices are starting to go up again. People are getting hired, blah, blah, blah. But really, we've had to grossly overpay for those benefits. And the real reckoning will come when all this new debt that we took on blows up. Now, what happened in just the last few months, for instance, is emblematic of the bigger trend. And that is China started to have problems with all the debt that it took on post 2008, 2009. And it started to drift into a bit of a currency crisis. And that scared the rest of the global economy. So we had the beginnings of a bear market early in this year, when stock markets around the world were tanking. Well, China responded to that by borrowing $1 trillion in the space of 3 months and spending it. And that has propped up commodity prices. Oil's back up a little bit, and steel prices are up. The iron ore market is healthy again. Copper's up. And this was a total con, of course, because they just borrowed money and spent it. And that papered over the trouble that they had with their previous debt, but it didn't solve anything. And so the question becomes, how long can we keep doing this? How long can the governments of the world keep lying to their people about the amount of money that they're effectively borrowing from their grandkids? And the answer is probably not too much longer. I mean, we're hitting a point where, despite the fact that we borrowed all this money and created all this new currency, and we've pushed interest rates down to zero in a lot of cases and negative levels in many cases. For instance, U.S. corporate earnings are coming out horrendously in the first quarter. Just today, we had Apple report that its sales shrank by over 10% year over year in the first quarter. That means Apple, this iconic, super powerful company that can do no wrong, and everybody owns its stock, is actually getting smaller now instead of bigger, and making less money instead of more money. And then Twitter, which is kind of an extremely well-known internet company, reported decent earnings but horrible guidance, where they're going to have revenue that's something like 15% less than Wall Street was expecting. So their stock is tanking in the after hours, and that comes on the heels of terrible reports from the big banks, who are all very heavily leveraged in the energy market. So they've got all these bad loans relating to energy companies. So the big banks aren't making any money either. So how can we be having a recovery when our biggest, most powerful companies are either not making as much money as the year before or flat out losing money? And the answer is we can't. You can't have a vibrant, growing economy when the most powerful financial entities in that economy are regressing. And so I'm thinking that this might be the thing that exposes the lie, that makes people realize that all the stuff that we've been doing for the last 5 years and 10 years and 30 years has all been kind of a con that allowed the people in charge to live really nice, cushy, high prestige lives and then retire with lots of money and stroll off into the sunset and leave this huge mess for their successors. So I think there's a good chance that kind of phase change in terms of how we view the system and the people in charge of the system is coming in fairly short order. I think that the bear market in stocks that flows from this current cratering in corporate profits might be the thing that sets off a chain reaction that really changes things.
And in another article that you wrote quite recently, this phenomenon that you're describing of a staggering, stumbling economy that's being propped up only by outrageous amounts of debt, injection of false money through debt, and while claiming, denying that the economy is really on life support, while increasing life support to ridiculous amounts, is accompanied by a backdrop of aging population and bloated additional debt in terms of unfunded liabilities and obligations for pension plans. You mentioned that in the Eurozone, a number of countries are obligated to pay large pensions to an aging population, and that's just a freight train that's been coming towards them on the tracks, and they've been doing nothing to prepare for it. So could you give us a more complete picture of in this environment where earnings are bad, economic growth is not happening, debt is much worse than ever, but what's also going on in terms of the liabilities, in other words, future debt that countries and companies are owing to retirees?
Yeah, this might be the most outrageous part of the story of all. Basically, what happened was after World War II, the European countries, followed by the U.S., set up very generous health care plans and retirement plans for their citizens. And the deal was, if you work hard and pay taxes and obey the rules and live what we define as a good life, we'll give you a good retirement. For the last 5, 10 years of your life. We'll take care of your medical bills and we'll give you enough money to live modestly, but without care. And the downside of the way they did this is that, especially in Europe, they didn't put anything away for the eventual retirement of the baby boomers. They just financed these plans out of current revenues, current tax revenues. And that worked beautifully while you had this huge baby boomer generation working hard and paying lots of taxes and supporting the World War II generation, which is much smaller in retirement. Well, now my generation, the boomers, are retiring, and the costs of taking care of us will go absolutely through the roof. It's going to be 2 or 3 times as expensive to take care of us as it was to take care of the remaining World War II people. And nobody's put any money away for it. Even in the U.S., we pretend to put money away via the Social Security and Medicare trust funds. But we invested the trust funds. In other words, we took money out of people's paychecks and put that against future Social Security and Medicare obligations. But what we did with that money was we bought government bonds. And those government bonds are paid for out of current tax revenue. So basically, we spent all the money that we thought we were putting away, or that we claimed that we were putting away. And now when boomers retire, when I get my Social Security check eventually, it's going to come directly out of the pocket of some 28-year-old living in a trailer park just making ends meet, because the government spent all the money that they claimed they were putting away to take care of me in my old age. And that's mathematically impossible, first of all. Besides being dishonest and a huge, huge ripoff for our kids and our grandkids, it's also a big lie, And we're also coming to the point where we hit that wall as well, because the numbers are starting to go parabolic now, especially in Europe and Japan, where their populations are much older than ours is in the U.S. They're already seeing numbers that are, beyond unsustainable. They're just ridiculous amounts of money that they're going to have to come up with. And they have no way of coming up with it because they're already maxed out. Their governments are already 40, 50, 60% of the economy. And taxes are already extremely high in most European countries. So they can't raise taxes without just causing their economies to grind to a halt. They can't cut benefits because the baby boomers we vote and we're selfish. We're not going to give back these benefits that we have earned, and that were promised to us. So you can't stay in office if you balance the pension books. So the only thing that can happen is that's here, Japan, possibly China, and definitely in the US and Europe, is we're going to have to devalue our currencies to make these pension benefits look or easier to manage. We won't cut the benefits, but we'll devalue the currency in which we're paying the benefits. So my generation, the boomers, we will get stiffed eventually.
So the government will still owe you $1 million, but it's going to pay you a million measly dollars.
Yeah, $1 million that might cover your rent for a couple of years, And so that also is, of course, it's a huge lie, but it's the least painful lie for these governments because they can get away with that for a while. You can ramp inflation up to twice the cost of living increase that you apply to Social Security and Medicare, for instance. And that means that you're paying less in real terms on those programs, and the people who are receiving those programs are getting less value than they thought they were getting. But it's not really clear to voters, because they see Medicare and Medicaid going up and Social Security payments going up in nominal terms. So it looks like the government is giving people raises and being really generous and everything, but what they're really doing is stealing twice as much as they're handing out. And because that's the only thing left for these guys to do, it's virtually a lock that they're going to do it. And they're already talking about that in the U.S., where the government is considering changing the way it calculates inflation for the purposes of adjusting Social Security payments to make those payments be a little smaller. In other words, they're going to mess around with the definition of inflation and in that way save themselves money while stiffing Social Security recipients. And when it really gets going, when we really start devaluing the currency in a way that can't be hidden anymore, that's when things get interesting, because there's a thing in the Austrian School of Economics called the crack-up boom, which is a point when a critical mass of a population figures out that it's the government's explicit policy to devalue the currency, to make your money worth less and less year after year. And then everybody says, well, I don't want to hold this currency anymore. So as soon as you get your paycheck, you go buy some real stuff with that money, because that way the real stuff will have utility and the money will go down in value, but you don't own it anymore. Well, everybody will be out there trying to buy real stuff, and that will push the price of that real stuff up. So you get something that looks like a hyperinflation, but really what it is a total loss of faith in the currency. And so it's not an oversupply of currency, it's a loss of faith in the currency. And then things spin out of control, really, because you get something like, Weimar Germany in the 1920s, when nobody trusted the currency anymore and prices went up at, multi thousands of times, 1,000% a year. And in the end, the system fell apart. And this has happened numerous times throughout history. It's not some, mystical, magical thing that some economists made up. It's just observation of what happens when you give the government a printing press. Fiat currencies have all died in exactly this way. And this latest batch of fiat currencies will go the same way as the previous 20 or 30 or 50 or 100 or however you define fiat currencies in historical past. And the only question is when. So it looks like another financial crisis, which could flow from corporate earnings tanking, which tanks the stock market, which sends a lot of big companies into bankruptcy, that kind of thing, and causes a lot of pension funds to default, because already it looks like Chicago and Illinois are both bankrupt. They might be the first major public entities to default in the U.S. But the next crisis will give us a kind of waterfall effect where one thing happens and that causes another thing to happen, and you get everything falling apart in kind of a cascade failure of the system. So it's very possible that we're not that far from that, because so many things are teetering on the edge right now. U.S. equities are at record levels, while corporate profits are plunging in a lot of cases and flattening out for a lot of companies that used to be growing dramatically. And China borrowed that $1 trillion. It's not clear they can borrow another $1 trillion in the next quarter to keep it going. Japan has a demographic mess that is astounding. Their government has borrowed more money as a percent of GDP, as a part of the economy, than any other country has ever borrowed. And they've got the most quickly aging population. So their costs to take care of their retiring baby boomer generation is ratcheting up faster than anybody else's. So they're teetering on the edge. So you only need one major crisis, like, for instance, the Eurozone breaking apart, or Japan having a currency crisis in which nobody wants to hold yen anymore, or China seeing a debt crisis flow from all the money they borrowed just lately. Just one of those. And it takes everything else down with it. So the odds are that at least one of those things I just mentioned is going to happen in the next few years. And then it's game over for this current system. So it's a really scary prospect, but for an individual, it's an interesting intellectual challenge, because how do you position yourself to get through this in one piece and maybe even make some money? In past crises, there were things that if you bought them at the right time, they went way up. During the Great Depression, a lot of fortunes were actually made by people who bought the right stuff.
Before we get right into that, and I do want to next, I wanted to capture one thing you mentioned in passing on a couple of points you just made. You mentioned that Europe and Japan are a couple decades ahead of us, perhaps, in terms of the aging population. And if we wanted to see what our future looks like in terms of pension obligations and that sort of thing, we'll get a sneak preview of it by watching how they deal with it. You just mentioned the demographics being horrible in Japan, but in your article about the Euro debt obligations towards the aging population, you mentioned a very intriguing point about the role that recent influx of immigrants is making to try to replenish or serving to replenish some of those ranks of workers that are retiring. And it's been said, there's been a video called Demographic Winter. There's others that have been talking about the world, the industrialized nations of the world contracepting themselves to death, and that no civilization has ever recovered from birth rates lower than 1.7, I believe it was, and yet many parts of Europe, whether it's Italy and other parts, have been 1.6 for several years now. And that if we are on the verge of a demographic winter, and how that plays out economically and financially for a country with obligations, as you try to borrow from the future generations, but there's fewer of them, and you're trying to prop up and support the lifestyles of an aging population. What does the role of immigration play in that, and are we seeing any signs that the sort of mystifying permissiveness of both the United States and certain European countries towards masses of immigrants, even despite these economic hard times, may be in fact driven in part by the desperate need for those numbers of workers to replace the aging population?
Well, yeah, from a purely actuarial standpoint, that's one solution to an aging population. You let lots of people in who are fairly young and who are going to have a lot of kids. And so you skew your population back towards a level that is young enough to cover the pension obligations that you've created. And that works mathematically, but it's hard to do in practice because if you want to keep your culture fairly intact, apparently, you can only take in so many people from different cultures at any given time, or else they will swamp the existing culture, and then you get sort of you get the chaos of competing cultures without one central ethos. And in the U.S., we see this on a smaller scale with Latin American immigrants coming in. And in some parts of the Southwest, people are a little freaked by the fact that we're becoming more and more like Mexico. But Latin Americans are basically, in a lot of ways, European. They're more consistent with American culture than a lot of other cultures might be around the world. And Europe has tried something different. They decided to try the demographic fix, by letting in lots of new immigrants. And they've been doing this for over a decade now, where they really opened the floodgates. But they've been doing it from Africa, North Africa, and the Arabian Peninsula. And those guys haven't assimilated as well as most Europeans would hope. And so you're getting a serious backlash in Europe in which fringe parties of both the right and the left, people who used to get fractions of 1% of the vote in major elections are now getting 5, 10, 15, 20% of the vote because they're opposing immigration policies that a lot of regular people believe is hurting them in some way. And so it's completely possible that you can't do the demographic fix on a scale that Europe is trying and hope to maintain a stable political system. In other words, people will vote you out of office before you hit the demographic number that fixes your pension system. And that seems to be what's happening in Europe right now. For instance, the far-right party, which was not a mainstream party until very recently in Austria, just got the most votes of any party in the first round of the elections that they're holding here. And the two main parties didn't even make the runoff. So it's going to be, some parties that are not part of the mainstream vying for leadership now in Austria. And, it's not clear who it is that's going to win in the end. But the fact that the far-right anti-immigration and anti-Euro party got the most votes says a lot about the mental state of the electorate there. And Austria is not alone. France, the biggest vote-getting party, is National Front, which is very far to the right and has been considered way out of the mainstream by most of the mainstream in France. But now they get the most votes of anybody. In England, in Britain, UKIP, which was once a far-right fringe party, is now a big vote getter, and they're leading the charge for Britain to pull out of the European Union. They actually got a referendum on the ballot for June in which Britons are going to vote to leave the EU or stay, and it's about a 50-50 deal right now. It's about an even split between stay and go. And, you can go through every European country and find a similar story where some party from the far right or the far left is getting a really surprising number of votes and is promising, if they actually win, if they actually take power, to really overturn the apple cart. So it looks like the European Union, and especially the Eurozone, the common currency, are in grave danger right now. And their immigration policy is a big part of the debate over there. It's not the only part, because their economic policies are a mess in many other ways. But it looks like the strategy of letting in millions of people from other countries and other cultures all at once isn't politically popular enough to be maintained. It's not clear how they fix it going forward, but it is very clear that people aren't willing to vote for it. And in the US, we're seeing the same thing. I mean, Donald Trump, who probably had a 1% betting chance of getting the nomination at the beginning of this process, is now just about a lock to be the Republican nominee. And his big policy plank, his main strategy is to build a wall between the U.S. and Mexico and send home all the undocumented workers and basically do what the right-wing parties in Europe are threatening to do to their immigrants. So that plays to a big part of the population. And so that is a limiting factor on this strategy of using immigration to fix pension plans. And since you can't use immigration, apparently, to do it, that still just leaves currency devaluation, And one way or another, that's going to happen. If, for instance, in Europe, if an anti-Euro party takes power in, for instance, Italy, and pulls Italy out of the Eurozone, they'll go back to the lira, and they will devalue the lira by, let's say, 50%. And in that way, they'll get out from under their debt obligations, because they'll be paying their debts back, which are still, they're still whatever they are. You just convert those lira bond or those euro bonds to lira, one for one, and then you devalue the lira by 50%, and your debt in real terms goes down by 50%. So that's what the European countries will do if the Eurozone breaks up. And even if they don't, the only way to keep the Eurozone together will be to devalue the euro itself. So Germany is going to have to swallow a very, very bitter pill, because they have had a hyperinflation in living memory. They know what it's like to destroy a currency. Right. And they may have to do it again if they want to keep the Eurozone together.
Yeah, I attended a live lecture by James Carville, a Democratic strategist in the U.S., who said, in his words, the next 40 years belong to the Democratic Party. And one of the reasons for that is the influx of Mexican and other immigrants from this Southern and Central America, overwhelmingly voting Democrat. And yet you're pointing out that there's a real danger in, at least if you strip back it's not just humanitarian reasons. These are being, these immigrants are being basically welcomed in with open arms. There's if they're ready-made voters into your voter bloc, that's one thing. Or B, if it helps to try to ballast the upside-down demographics that you're otherwise suffering with. But if there's a backlash against that, it can really play not into the hand that you thought it was going to. And that leads us to the next topic that you had alluded to earlier, and I wanted to hold off till we made sure we touched on this one. But you said that people in Weimar Germany who, as part of that crack-up boom, reactively finally awakened and realized they did not want to have their hands on government fiat currency, would just put it into anything physical, anything real. It was better than cash. But if for people who are watching this interview are not reactively awakening, they're trying to be proactive. They're trying to seek out strategic answers, ways that they can be prudent and position themselves ahead of time. And that's where you were going. So what is available? What options should people really educate themselves on that they can do now proactively and not be part of, but basically position themselves to benefit from that final crack-up boom when the country does have no other alternative than to devalue the currency more rapidly than it already has been for the past century?
I think the important thing to understand about what we're talking about is that it sounds all dark and disastery and gloom and doomy, but it really is an investment play that we're sketching out, right? The world is doing what it's doing. We can't stop this stuff from happening, but we can position ourselves so we at least protect ourselves and maybe get rich from it. And every crisis in human history has had things that worked out very well for the people who were well positioned at the time. In the Depression, if you bought government bonds, you made a lot of money because the value of the dollar went up. So the value of the income stream from government bonds also went up. You made a lot of money. And in the currency crisis of the 1970s here in the U.S., people who bought gold and silver made fortunes because as the U.S. dollar was tanking, gold and silver, which are forms of money that governments can't create in infinite quantities, they exist in limited quantities, they went up relative to these fiat currencies that were being inflated away. So it really depends on your sense of what you see happening, because we could go we could go two different ways here. We're at a crossroads right now where we could just collapse under the weight of all this debt and then have a 1930s style depression, in which case you want, dollar cash and you still want gold and silver no matter what. But you don't want to hold junk bonds and things like that because they will go out of business. Stocks and bonds, those are bad things to own. But if we have a 1970s style inflation or, God forbid, a Weimar Germany style hyperinflation via a crack-up boom, then you truly don't want to own anything that pays you an income stream in that currency. So you don't want to own any kind of bond because all that is a loan that you've made to somebody, and they're going to pay you so much per year until they give you all your original money back. And if the value of the currency is going down, then the value of the money you get from your bond goes down. You don't want to touch stuff like that, but you do want, again, gold and silver, because they're forms of money that tend to do very well when paper money is being destroyed. And you want other real stuff. Farmland gets very valuable in inflationary periods. Energy assets, interestingly enough, they haven't done so well lately, but over long periods of time, because, you can't make more oil. And solar power plants tend to be very predictable in their income. Stuff like that will get more valuable over time if we destroy the currencies in which we're denominating all this stuff. So it, first of all, depends on your vision for the future. Which way are we going to go? 1930s or Weimar Germany? And then you just need to figure out which assets are historically most likely to do well in the environment that you think is most likely. And then you just skew your finances in that direction, and you're reasonably well protected. But you got to go beyond that, because you also don't want to leave all your eggs in any one basket geographically. Like if you have all your money in the U.S. and the U.S. goes particularly crazy, and we can't tell who's going to flake out most completely in what's coming, but let's say the U.S. does, and they institute wealth taxes, or they confiscate gold and silver like they did or at least they confiscated gold in 1934, or they institute capital controls, which won't let you move money out of the country no matter what they do. There's all kinds of things that they can do to siphon wealth away from even the people who make the right decisions heading into whatever crisis it's going to be. So you need to diversify geographically. Move some money overseas. If you can buy some real estate in another country or store some precious metals in a vault, a really well-secured, insured vault in another country, that's a good thing to do. If you have the kind of capital that lets you do that, it's definitely a smart thing to do. Beyond that, beyond your finances, you want to start thinking about how to structure your own life. Become as self-sufficient as possible so that if the big systems that we now count on to deliver all the stuff that make day-to-day life possible, if some of those systems don't work, you're still okay. And so that means maybe being able to grow your own food, or store some food, or keep some cash on hand, like the gold and silver coins that you store in your basement or your backyard or your kitchen freezer or whatever. That's what those things are for. That's for if the system isn't working right. If your ATM doesn't work anymore at the bank, or your brokerage account gets hacked, or the government taxes it away and replaces it with government bonds, which they then inflate away to oblivion. If something like that happens, you've still got some money that is in hand and can't be touched by anybody else. So, and at your job, you want to make yourself as indispensable as possible, because the kinds of crises we're talking about, either one, deflation or inflation, both make most jobs less secure, because capitalism doesn't function well in periods of uncertainty. And that means there are fewer jobs out there. So assuming that you accept the idea that we're heading into a period where there might be some big financial crises, it makes a lot of sense to look around at your job and figure out the things that they need done, not just what they're paying you to do day to day, but the things that will make you indispensable to the people who eventually are going to have to start laying off some of your coworkers. You want to be the last one fired, and you want to figure out ahead of time what it takes to make you the last one fired. So I know it's a lot to think about. There are many facets to what's coming, and I myself don't do everything, but these are the things that somebody who has the time and the capital and the inclination should be thinking about. And if you do them all and you do them right, you will sail through what's coming, or there's a good chance you'll sail through what's coming in great shape. People did it in the Depression. People got rich during the Depression, and people got rich in the 1970s, and presumably they got rich in Weimar Germany. So what our goal should be as individuals is not to try to influence the political process, because that's too far gone. There's nothing we can do to stop what's coming in terms of the decisions that the government makes. Our job should be to position ourselves and our families as perfectly as possible, so that what happens, first of all, doesn't surprise us, and second of all, doesn't hurt us, and third of all, maybe even enriches us. And, it's possible. There's a set of strategies that will do that, and we just have to figure out what they are and pursue them.
Well, I think with that, we'll love to take it to applying those lessons, for our viewers to be able to take what you've given us and really take to heart those lessons of look what's going on both around the world and domestically, both economically and in the debt, in the currencies, and the demographics, and really take a sober look at what we can do to strengthen our own personal position so that we can take care of our families better. And if people want to find more about your work, John, where can they find you and get more of your insights on an ongoing basis?
Well, I run dollarclaps.com, which is a continuously updated site that covers a lot of the stuff we just talked about. My latest book, co-written with Gold Money's James Turk, is called The Money Bubble, and it also covers a lot of what we just talked about. So the Money Bubble is your background information, and dollarclaps.com is the ongoing updates for what's happening in the global financial crisis as it unfolds.
Once again, John Rubino, manager of dollarclaps.com and author of multiple books and articles on an ongoing basis that's helping to get the word out there, to keep people informed so they can be aware and prepared. Thank you so much for joining us here again on Reluctant Preppers.
Thanks, Danigan. Enjoyed it. Keep up the good work.